Well, good day, fellow investors. The euro is at 20-year lows against the dollar. So if you're from Europe, ouch. But if you're not from Europe, then it might be finally time to take your wife to Paris. She always wanted it, and as a real global value investor, you know what is a bargain, and Europe is now 20% cheaper. So if you take a look a little bit at what has been going on over the last year, the euro is down almost 20% against the dollar, and especially it has been destroyed over the last weeks, which leads to significant impacts to the euro economy because much more expensive now, and also from an investing perspective, if you need to invest your euros now globally, then you are a little bit toasted. Of course, this is impossible to predict. There have been these cycles, then rebounds, and unfortunately for the euro, the trend is pretty clear. Given that the ECB doesn't have the power that the Fed has to increase interest rates because the dollar is the global reserve currency, and as Seth Klarman says, the euro is just an experiment, 20 years in the making, and we will see how this ends up with Europe, with all the issues, with everything. So it is, from a fundamental perspective, one of the weakest links in the global currency between the euro and the dollar especially. But nevertheless, let's look a little bit about investing today, investing into Europe and also investing from Europe, outside Europe, what to do with diversification and what's the outlook there. So investing from Europe, we just did a video on 5 European stocks, and stocks got cheaper. So if you're investing from outside and you're looking at cheaper stock markets and 20% cheaper currency, so that's a double bonus for you. And from Europe, from the European perspective, cheaper is better, but you don't have that euro cheaper advantage. So yes, European stocks will get interested. We covered 5 of them here, more of them also in the YouTube portfolio. So to have a balanced overview of Europe, Asia, and the US, all the investment global markets. So subscribe for that, because that's what we do here, and we will always look for that value that does good no matter the currency. Now, European investors might be wondering about diversification now. We discussed this constantly over the last 5 years on this channel, and I always said, be long other things and short the euro, take a loan. Now it might be a little bit late to do that because the trends have already evolved and the euro is really weak. But when it comes to currency prediction, this is really hard to predict. These ups and downs, and you can see how sharp these things are, up and down and up and down. Also depends on what the Fed will do, what others will do, how will they react. And for now, it looks like the Fed will keep rising interest rates, which makes the dollar more attractive. Because if you get 0% for euros on European bonds, only the ECB can buy them, and therefore the ECB cannot stop buying them because that would break all hell loose. But the Fed is much more interesting. You get 3% on that 10-year treasury with higher interest rates. So if you are rebalancing globally, the euro looks less and less attractive. Plus, there is always the warning of a recession. With the weaker euro, then everything is much more expensive. Spending, energy, input costs, especially oil that's in dollars, is more expensive for European companies. Thus, if you sell in Europe, then you have that smaller margin. So that will have a big impact. On the other hand, if you are buying companies that are in Europe, lower because of the negative sentiment in Europe on pessimism, but have costs in euros but sell in other currencies, that's a benefit for the company. So always look at those. That's always the situation with Brazil, another market that we have to analyze and look for some interesting ideas. So as investors, plenty of work to do to find those good investment ideas that in a recession might be really cheap. And if the euro continues to crash, it will be enormously cheap for outside investors. I'm always for looking at value and not really currencies. Currencies go up and down, and usually when a currency goes down, the market goes down, recession fears as we are seeing, and that makes a perfect buy, because when things start reverting, the business, the economy, then also the currency reverts, and you have a trifecta of positive things. Now you have a trifecta of negative things, but you have then a trifecta of positive things that increases the return that you make on an investment. So we'll keep watching, we'll keep discussing, won't go into details now, but Europe is getting more interesting from every perspective. Now, on the outlook, Agnolini here says that now for Europeans, it is totally uninvestable, everything around the world, just stick to Europe because the dollar is so expensive now. That is a little bit of anchoring here that I sense. Because yes, if you look at this, everything in US dollar is now 15% more expensive. But when it comes to the outlook and predictions, who is saying that this might not be 0.8 in the next year? If Europe really gets into a bad situation, it might again go to 0.8 or even lower. Look at this. Lower. So from that perspective, if it goes lower, then it is good to invest in other currencies. I've made this video discussing Europe and the fundamentals ain't good. So watch that video. I'll put also a link in the description below and here. And the fact is that when you have weak fundamentals, weak demographics, highly indebted companies and countries, the only answer is for the ECB to print more than everybody else. And we see now in the Netherlands with the shenanigans going on. So imagine what happens to Europe and financial situations, the ECB, politicians, if really shit hits the fan in Europe. That is a big negative outlook, because we are not as coherent in countries as something else might be. So there will be more weaknesses, and if trouble starts hitting the fan, if Northern Europe doesn't push trillions into Southern Europe anymore, then we might have really an ugly situation. I hope not. So that's the outlook there, but impossible to predict. What we can focus on is fundamentals, businesses, and just keep accumulating wealth over time. There is always that value. Real estate, if it is good, gives you value, no matter what currency it is, but it has to be a good real estate, a good business, a good quality stock representing a business. No matter the currency, will give you great things. And that's investing. That's always the message I want to give to you. So if you are from outside Europe, visit us, come for a coffee. It is cheaper. It might get even cheaper, but we will enjoy your company. If you are from Europe, well, what can I say? We just need to continue doing what we are doing, accumulating wealth. Don't really look at that, this is cheaper, this is this. Just look at the value, and that's the only message we can stick to and hopefully do better over time. Check my research platform for in detailed research analysis. Check the YouTube portfolio that we just launched for ideas to streamline what's going on with the YouTube. Just did 2 cheap European stocks that we started following. So thanks for watching, subscribe if you haven't, and I'll see you in the next video.